So today is all about, we're going to be how smart investors actually analyze to know what a good storage deal looks like and how to say yes, no, or an offer in under like 5 minutes. So this is something that's really important, is speed kills deals. And I see this all the time. And the reason why I'm saying this, and even to myself, is that you've got to be really fast at understanding like what makes a good storage property. What is it worth today based on its gross income, the revenue in the bank? And then what could it be worth in 3 to 5 years? And then is it in a good market? And if those criteria are met, you got to shoot your arrow and you got to go for it, put an offer out there and get yes, no, or an offer, okay? So this is one of the most important things to know, is how to analyze a deal and then go after it. And so a lot of people, smart investors, they don't run 20 spreadsheets. They run one filter and they get really good at it. And they actually, like, one of my favorite sayings is, you got to underwrite a storage deal a day to help you buy your first facility right away. And it is very, very true. So I have underwrite like hundreds of self-storage deals to really understand what a good market looks like, and then also how to get really fast at submitting offers to brokers or to storage owners. Okay. So your goal is not to be perfect. I want to say this over and over again. And the goal is to, act fast and to also be able to pivot and negotiate and really start to build relationships with storage brokers and storage owners. So the more you start to talk numbers, you build a relationship. And relationship, you guys, capital is one of the most important pieces in real estate, right? It's a people game. And so it's all about long-term people for long-term results. And that is very, very true in self-storage, because you never know where a good deal is going to come from. So we're going to walk through, you guys, this 5-minute self-storage filter on how to say, yes, no, or a number. And so you guys, step number 1 that we're going to look at is, what is that storage facility's current revenue, the real money, like in the bank today, right? So you can always ask a storage broker or a storage owner, like, hey, how much are you grossing each month, right? What is the average that you're grossing each month? And then, oh, hey, by the way, it's almost year end. What have you grossed revenue wise in 2025, right? We need to know the money in the bank. And so this is important. If you guys stay to the end, I will give you my storage offer calculator if that is something that you're interested in, but we want to know what is the money in the bank. We don't want to look at future projections. So the second thing, you guys, that we need to understand is the true expenses. We're going to keep this really simple. Okay. So true expenses. A lot of the times I want to share this with you on the OM. A good storage broker will be honest, and you will see an expense ratio between 30 to 40%. Okay. That is true adjusted storage expense ratios, right? We are in the business of renting space. And so the best thing in storage is that our expense ratios get to be in a lower category than multifamily. But when you see on an OM that they have 19% and they're evaluating this way, you can skew the purchase price. So very much always think about, what has this broker said? Is it true? Can I prove it, right? So once you have your gross revenue minus your business expenses equals your net operating income. We do not take away debt right now, okay? So your net operating income is purely just your gross revenue minus your business expenses, such as website, lawn care, real estate taxes, all those different pieces, equals your net operating income. And so from that information alone, we can then go to step 3, right? So step 3 is market cap rate. So we want to take a look at, in a 5 to 10 mile radius, what is this market cap rate? You guys, cap rate is not the only thing we evaluate, but when we look at something like back of the napkin, brokers like to look at this on how a facility is actually going to return your income if it was purchased all of cash, right? It's a return metric that people use. And so just like in like residential real estate, cap rates are a comp. Very similar to residential real estate comps. They have comps in self-storage. We have market cap rates, and that is, you can really figure that out based on, a broker will know that firsthand, the self-storage almanac. And then also if you go to the chat GPTs and just kind of look at what pops up, that is something that's very helpful to understanding where a market cap rate lands for that area. Okay. So once we understand that cap rate, we can then understand step 4, right? So we can then look at market rent check, the market rent check. And what this is like, where is the upside, right? Like, is there an upside at all in this market? Is it oversupplied? Is it undersupplied? Where's the occupancy at? And so we like to look within like a 5-mile radius in self-storage. And so we like to find apples to apples. So the storage facility, the one that I'm just thinking about in my head that we just put an offer in on, it actually has gravel. We're looking at a 5-mile radius for another facility in that same market on Google's, right? That might have very similar looks. And I'm going to look at their 10 by 10, right? And I'm going to look at all these other storage facilities, that 10 by 10. I'm going to look and gather all those pieces of information. And I'm also probably going to call around, right? And actually ask them like, hey, if I rented this, how much would it cost? Okay. So that gives you a full perspective of, the market rent checks. And so the reason why we do this is we want to know, like, are they occupied? Are most of these occupied? Because that's really important. And if they're not, could that mean they're oversupplied? But are they below market rent? Are they at market rent? Or are they actually like above market rent and there's no more juice left to squeeze, right? So we have to be careful to looking at the market comps and the market rents for a 10 by 10 and all the other unit mixes. If there is no rent gap, right? Like if their 10 by 10 is $100 and everyone else around them is $100 and the average is $100, it's going to be hard to increase those prices because they're already at market rate. So I'm just going to give you that little tip. And then you guys, step 5 is the future value, right? So what is this facility going to be worth in 3 to 5 years? If I purchase it, I put my business plan and my business model on top of it and I run it, right? And so that's really important, is how I like to teach in the self-storage school so that students know if this is a deal or not a deal, is we're understanding where is the current revenue today, like money in the bank, and then where can that facility, if you buy it today, what could it be worth in 3 to 5 years if I put my business model and I operate it? And there needs to be a gap within here, because that's how you make money. JMM, just make money, right? And then the third thing is, you guys, the bonus that I really want you guys to think about that not a lot of people think about is your exit strategy. When you go to sell in 3 to 5 years, like if you buy it at $1.1 million and you can bring it to $2 million in 3 to 5 years, yeah, is this worth the squeeze? Is that risk worth the squeeze? Absolutely. You should be saying yes all day long, unless that market's just oversupplied. But you need to know, is that risk worth the squeeze? And, if I buy this, does this deal move the needle forward? Is there an upside? And what is the time to get me there? And how confident am I to get there? And then do you feel comfortable and confident making, increasing your rents in this market? Because that really helps you understand to decrease your risk. So I want you guys to walk away and kind of put this into a nice full circle. I'm going to give you guys an example. I'm going to share my screen actually, okay. So I hope this is sharing my screen, but what I like to look for, this is just a really quick, offer calculator that we put together. My storage school students know that they have this up on their desktop all day when they're talking to brokers and when they're talking to storage owners. If you guys want this, I will give this to you at the very end. But we had an offer that we put in with 2 storage school students this past week. They were grossing, you guys, a revenue of $10,000 a month was around the average. So annually they made about $120,000, right? All said and done, they had an expense ratio of 35%, about $42,000, which gives you a net operating income of around $78,000. Okay. Now I'm going to come in here, right here with the cap rates, right? And this area was in Arizona. And the cap rate for sure was definitely a 6 cap market. So really nice market, great population, and they had some room to grow. How they found this out was that they had no website. Well, they had a website, but they could not rent online. So people had to call them. And then most of the time they never picked up their phone because they were too busy. They had 3 kids. The husband had another business that he was being drawn to and had to do a lot of work within that business. They also had a U-Haul. And so there was a lot of, they would get people in and then people would stop paying, and they kept them in there for years. And so they weren't collecting on people that were supposed to be paying them rent. And number 2, the value add was they were 20% below market rates, which was insane. So easily, you guys, within 3 years, 2 to 3 years, they could actually bring this facility up to about $18,000 gross a month. So the money on the table, you guys, this is the spread right here. The spread was 18,000. So from 10,000 to 18,000 gross a month within 2 to 3 years. That's conservative, right? And adding on some additional revenue streams that like tenant protection plans and admin, fees and a few other things that they could expand on that property. But, they really wanted the purchase price of like 1.43 million, right? So what it's worth today, 1.3, what we put an offer in at 1.4, 1.43 million, and what you could take it to within 2 to 3 years was about a good 18,000. So 6 cap market, $2.3 million, right? Would that be worth the juice to squeeze? Absolutely, because we walk away with what it could be worth. Like, what's it worth today? 1.3. We bought it at 1.43. We didn't overpay. We overpaid a little bit, but that's okay. And the value we were able to get it to is about 2.34 in about 2 to 3 years, and that was very conservative. So at like a 15% vacancy. And so I wanted to walk you guys through these main concepts where it's like, what is it worth today? Right here, what could it be worth in 3 to 5 years if you purchased it? Is it in a good market? And how far below rates are they, or are they at rates? And then number 4, like, is it worth the juice to squeeze? What is the risk worth the juice to squeeze? Absolutely. If you can make, about $1 million, $900,000, I would say hands down, everyone should be having their hands raised. So I wanted to walk through this example as you guys start to look at storage facilities, especially the ones, on LoopNet and on Crexy that are coming through the pipeline, because I am seeing more good storage deals popping up in the past 2 months than I've seen in the past 18 months. Storage owners are raising their hand saying, I am open to a storage offer. In 2020, 2021, they had, 3.5% interest rate. They had almost 4% interest rate or lower. And now, in 5 years, it is starting to reevaluate, right? At a 7%. And so there's a lot of storage owners who are like, you know what? Like, I want to retire. It's my time. My, loan is readjusting. This is a great opportunity to start looking at offers and what we can actually make with our storage facility. I want you guys, it is be due December. Like, this is the time to start putting in offers, start building relationships, understanding like, how do you actually evaluate a storage facility? And then starting the urgency of putting in offers, because if you never put an offer in on a storage facility, you will not get one accepted. Like, you will not buy a facility. And I say that because people get really good at looking for storage deals, and they get really good at finding them and then analyzing them, and then they never put offers in. And so this is why, we actually opened up self-storage school about 2 years ago, was because we help people buy, and operate their first facility like 10 times faster. So it is be due December. And so we are taking on 5 new students for this month. And you guys, this month alone, if you do, actually apply, book a call, you guys get to lock in the co-founding rate in addition to free one-on-one coaching in January to help you submit that offer. So we actually walk you through how to analyze a deal. We give you a property to analyze as a case study. And then we also help you put in that first offer. So if you guys are interested in buying your first facility in 2026, you have to start now, because the floodgates will open in January. Everyone will say, hey, everyone and their mothers starts jumping into storage. I feel like for the first, 1 or 2 months, and then they kind of fall off. But if you are surrounded by a community, you have action takers around you, you are getting storage deals fed to you from a pipeline. Like, we have a pipeline, like we have too many deals right now. So this is something that we pride ourselves very much about, is being able to help pair people together, to partner for money and JV together. And then we also help bring deals to each other. And so if you guys are interested, make sure you send me the word, just DM me the word on Facebook, the word school, and I will send directly the application to you. You'll apply and you'll jump on a call with either me or my business partner. There's no pressure. We just want to have a conversation and see if it would be a good fit. Okay, you guys have a wonderful day today. Such great talking to you. I hope you guys start analyzing these deals and then taking action. Have a wonderful day. Bye. See ya.